What's up, guys? It is Sam here, and I wanted to talk about my options trading. If this is your first time here, what's up? My name is Sam. If you are coming back, then thank you. The other day I did a video on my options trading and how I've shifted my strategy from trying to make as much profit as possible to a more thoughtful and considerate approach. And the reason I did that is because I more than doubled my account value in a very short period of time, and then I lost all of it. So not the money that I put in, but all the profit. So I was like, let's do this again, but just take a more conservative approach to it. And what that approach is I would like to be able to make, and I don't have a large portfolio value, like I've got $5,400 in there. I'd like to be able to make enough money in profit every week to be able to purchase one share of Tesla stock, plus a margin of error. If you hold Tesla stock constant, meaning it doesn't change in price, as I say, it's about $225 a share. I'm about to get into that in a few minutes, but if it's at $225 a share, then if I make $250 or $270 per week, then that means I'd be able to buy one share of Tesla stock and have a little bit of margin. That margin gets added to the portfolio balance, which means that the amount I have to earn in profit every week as a percentage of the total portfolio to buy one share of Tesla stock is going down. Now, if Tesla stock goes up at the same rate, then it's just going to stay constant, meaning that if I have to earn 2% per week, then and Tesla stock is going up on average about 2% per week, then I will have to, the percentage will stay the same. Or if it increases, then if Tesla stock increases faster than the rate at which the portfolio value is growing, then the percentage I have to make on a weekly basis actually increases, which means that I'll have to take on more risk. So on Monday, today is July 3rd at 8:55 a.m. before the markets are open. But on July 1st, I opened 3 positions with a total max profit that I could make of $280. So I wanted to go over those positions very quickly because yesterday I closed out one of those positions and I did not make maximum profit on it. I had let's see. I had opened and I'll show you all this too. I had opened a Tesla put credit spread for the 360 to Netflix. Apologize. I'm like, wait a second. 3? That's definitely not fucking Tesla. Netflix put credit spread at 360 to 352.50. So $7.50 spread there. That means that's the most I can lose on there. And I had 2 contracts with expiration on July 5th. This is a holiday week, July 4th. The markets are closed, I believe. Each contract sold for $43. So that's premium that I take in. And if it closes above 360 on Friday, I get to keep that $43. However, on the next day, so less than 24 hours later, I closed out that position. I bought back, so I sold each contract for $43. I bought it back for $8. So I made $35 per contract, and I had 2 contracts. So I made $70 so far this week on this contract, those 2 contracts here. And just show you what this would look like. So there's a little bit of a glare on the screen. There we go. Okay, so this is the put credit spread. And you get to see here, I went short 360. This is closer to the money. I went long 352.50s. This is the expiration, 7.5, 7.5. Selling means I'm short. Purchasing means I'm long. And right over here, it tells you the time, July 1st at 10 o'clock, July 1st, 10 o'clock. Now, if we just scroll up here a little bit, we get to see that This is a put credit spread that I'm closing out. This is 21 hours ago. If you just come over here, it's July 2nd, 2019 at 3 p.m. This is 360. So why is this plus? I'm buying. Well, remember, if we scroll back down here, this here, I'm short. So to cover a short, you need to purchase. And that's what this is doing here. I'm purchasing this because if you have a short and a long, the same expiration and everything, they close that. So that position is closed. Then the same thing here. This is, now I'm short the 350-250 put for 7.5. Same thing down here. I purchased it. So now those two are a wash. And if we come over here, the total credit that I received was $86. The total I paid to close the position was $16. So if you take the delta between 86 and 16, that's $70. One of the things that happened this week was that Tesla's delivery and production numbers came out. So if you want to see the video on that, there's a video right before this one. It's 20 minutes long, cover a lot of detail, as well as go over their SEC filing. And I actually found an error in their filing. So if you want to check out that, click on the little icon, go back. It's a video, I think 1 or 2 right before this one. So what do I have open right now? Well, I still have a Netflix, and this one, when the market opens today, I'll probably try to close this one out, unless we'll see what happens with Netflix this morning. But the Netflix 387.50 to 392.50 calls. So this is a call credit spread. This is above the market. Netflix is trading less than this. I don't remember what Netflix is at. I think they're around 370-ish. But I sold this for $28, and it's currently selling for $10. So I could take this off the table here. We'll see how today plays out. If I can close this out. So each contract, there's 2 contracts here. Each contract I sold for $14. Now it's selling for $5. So I buy it back and I make the delta between 14 and 5. So I would make $9 per contract, and I had 2 contracts. I might do that, or I might just put in an order to try to close it out at 4 so that, you know, I make $10. We'll see. I'll wait till the market actually open this morning. The next position is a 210 to 202.50 put credit spread on Tesla. If you were following along, last night there was a lot of movement. Tesla's above 240, so the value of this is going to drop to basically 0. I got $166. So I got $83 in credit per contract, and there's 2 contracts. So the total amount that I received is $166. This type of position is more of a bullish type position, because you want the stock price to stay the same or increase. So I received $166. What happened to Tesla stock? They increased. So the value of this is going to drop, and you're like, fam, why is that going to be helpful? So I'm short, so now I have to go back and purchase it. So if I received $166 and the price goes down, then that means I can go to the market and maybe pay $30 and close out that position. So I want to make sure that I do at least make $241 this week, ideally more, so that I can meet my criteria for this week. I might open up another position. So on my account, I still have buying power of $1,400, a little bit over $1,400. So I think I will probably open up another position today. More than likely, I don't know. I'll see how the market plays out this morning, but possibly Tesla. But I have a feeling there's going to be a tremendous amount of movement this morning, but that's why I was thinking that. So anytime that there's a tremendous amount of movement in stock price, that's creates volatility. Generally, it's downward price movement, but the ups and downs create volatility. Volatility is there's about 5 or 6 different factors that go into option pricing. So if you wanted to create a model to figure out the exact price of an option, one of the biggest factors is the underlying, which would be, in case that I'm just talking about Tesla stock, the next would be volatility. So volatility increases and I'm long, then that's bad. If volatility decreases and I'm short, then that's good. So this is just a basic overview of what's happened this week. In one day, made that $70. I'm going to continue posting. I will probably do another update video tonight in the results of trading today. I have a meeting at work, so I am not sure how much I will be able to do this morning. I might just try to open something, put something on, and let it just play out throughout the day and see how it goes. Anyways, appreciate you guys. Don't forget to subscribe if you found this video interesting, or share it with somebody else who you think might find it interesting as well. Peace.